can't find the house of your dreams, well, find something that's in the location of your dreams and turn it into the house of your dreams with Renovation Loans 101. We're going to show you how they work here today. If you're new to the channel, I'm Brad, the mortgage guy. I've been doing this 26 plus years, and we help borrowers nationwide, all 50 states, plus DC. We do this stuff every day. This is not just theory. It's actually happening for buyers out there. And actually, in this case, not just buyers, but people looking to refinance and renovate their home as well with renovation loans. Please subscribe to the channel. It helps us bring in more content like this to help with education. So let's talk about first what this is. This is a super high overview of renovation loans. I'm not getting into the nitty gritty, but you're going to leave here with an understanding of how they work from a borrower's perspective, from somebody who's either buying a home with a renovation loan or who is currently owns a home and would like to do renovations on it and is told, oh, you don't have enough equity in your home to pull out money to do renovations. Doesn't matter. Renovation loans, we're going to talk about that here in just a second, but this is just a general overview. We're not getting into the nitty gritty and training loan officers here how to do it, but we are training you as buyers and homeowners how these work and what you can do. So first off, let's talk about what kind of work can be done with a renovation loan. There, honestly, almost any kind of work can be done with a renovation loan. There are different types of renovation loans. Let me actually go there. Some people will ask, is this a conventional or is this an FHA loan? The answer is it can be both. And depending on which one you're doing, there might be some limitations. So as an example, with FHA, let's say you're buying a house that doesn't have a pool and you want to put one in, you can't do that. But you can if it's a conventional loan. Most of the things with FHA that you can't do, mainly luxury items is what they consider them that you can't do. Mainly those things, if you can't do them with FHA, generally speaking, you can do them with a conventional loan. Now, with an FHA loan, if you've got a pool that's existing and it just needs to be fixed, no problem. That can be done, but installing something new cannot. So in general, though, and almost anything can be done. It just depends on which program we're going to go into, the FHA or the conventional. And just like in regular mortgage world without renovations, the FHA is a little bit more lenient credit, a little bit more lenient down payment, all that kind of good stuff. And conventional maybe is a little bit more strict on that stuff, but not super strict. They're basically the same amount of strictness as with a regular loan as they are with a renovation loan. So what kind of work can you do? You could put on an addition. You could have structural issues on the property that are going to get fixed. You can do new roofs. You could do siding. You could do windows. You could do a dormer. You could do a driveway. You can fix that pool. You can install a new pool. Anything you want to do, you can do. You've got an unfinished space above a garage that you feel you can make into an awesome primary suite. Go for it. You can do that with a renovation loan. Honestly, pretty much name it. There's going to be some options for you to get it done. Maybe not everything on the FHA, but conventional for the most part is going to be pretty loose. Now, there are some restrictions in what you're going to do. Obviously, you're not going to build a house for $1 million that's only going to be worth $500,000. But the cool thing about renovation loans is that when they look at value, they're looking at the value after the work is done. So if you're buying a house that's fallen apart, it's $200,000, $200,000 to buy, need to put 400 into it. You've got a total of 600 in. They're actually going to look at the value of that property after it's done. Is it worth 600,000? If it is, awesome. You've got yourself a renovation loan. Obviously, it's got to be at least worth that. Although there's some exceptions on FHA. FHA will actually allow you to renovate up to 110% of the value of the house. But that's besides the point. Again, I'm not going to get into the nitty gritty. Let's just talk, again, general overview of how this works. It's using the after improved value. So if you own a home currently, that's a cool thing too. Let's say you own a home, you owe 300 on it, and you owe 300 on it, it's worth 350, and everybody's telling you, well, that $100,000 or $200,000 addition you want to put on, you can't do it because you don't have enough equity in your house. Renovation loans are going to look at your house and say, okay, it's worth 3 now. You're putting on a $200,000 addition. Let's go to an appraiser, find out how much it's going to be worth with the addition on it. If it's worth 500, you're good to go. And again, even with FHA, it could actually be worth a little bit less than that because we're allowed to go up to 110% of that value with the FHA loan too. So anyways, so some cool stuff. After improved value is what we're looking at. So let's talk about how the numbers work, because it's not the same as a regular mortgage would be, but it's also not conceptually all that difficult. You're going to take your purchase price of whatever the property is. Okay, this is on a purchase. If you're refinancing, we're going to take whatever you owe on your current loan and then add the renovations to that, and that's your new loan. But that's besides the point. Let's talk the numbers on a purchase for a second. You're going to take the price of that property. So let's say this property is really in rough shape. It's a $100,000 property that you're purchasing, and you go in there and it needs $400,000 worth of work. We're going to take that $100,000. We're going to add to it the $400,000. That's $500,000. Now, on top of the $400,000, both FHA and conventional loans want what's called contingency reserve, where if there's cost overruns, there's extra money in the loan already built in for those cost overruns. That's going to range anywhere from about 10% to 20% of the renovation. So if I've got that $400,000 renovation, you're probably somewhere around $40,000. You're probably at the lower end of that number. You're around that $40,000. We're going to add that too. So I've got 100 to buy the house, 400 to renovate, say 40,000 for reserves. That's 540. Pretend as if you're buying a 540 house. Now with an FHA loan, you need 3.5% down. For conventional, you probably, if you're doing low down payment, most likely you're going FHA anyway. But conventional, if you wanted to put down 20%, get out of mortgage insurance, fine, that works too. But you're putting your down payment based upon the increased amount, the price plus renovation plus that reserve account. So the numbers work super, super easy. Now, there are some streamlined versions to this program, and there's the full versions to this program that, each of them might require a couple different things. For instance, the full version is going to require a consultant to go out to basically a liaison between you, the builder, the appraiser, and the consultant is there as kind of that liaison. If it's a smaller project without structural things, we can skip that consultant. Again, depending on the program you're qualified for. I don't want to get into the weeds again on that. This is, again, supposed to be just an overview. But no, there's a couple extra steps for these renovation loans to do. Namely, that you're getting all of those quotes and all of the work contracts are getting done before you close. You are not doing the work before you close. So as somebody who's selling you a house, if I'm selling you a house and you're getting a renovation loan, I'm selling it. You got the house. I got my $100,000 in our example we just talked about. I'm walking away. You now own the house and you're renovating the house with the $400,000 that you got from us, the lender, obviously in this case, right? So the work gets done after you close. Let's talk about how long these loans usually take. They take usually a little bit longer than a normal loan. Generally, what I like to tell people is it's going to take 30 days from the time in which we get an appraisal. Now, in order to get an appraisal, I need to have all of our quotes in line from your contractors for all of the work that's going to get done. I need to have a full list of all the work that's going to get done and those quotes before we can get an appraisal ordered. Once I have that appraisal, we're about 30 days till closing, just like a regular loan would be, but there's that upfront work. So how long does it take? It depends on how long it's going to take you to get all that stuff done up front. So if that's going to take you 15 days, great. 15 plus 30, you're at 45 days. If it's going to take you a month to get together, which oftentimes it does for people, because on larger projects especially, there's a lot of people to coordinate. If you're using one GC, might make the process a little bit easier for you because they're quoting the entire thing. But if you got multiple people to coordinate, well, if that takes you 30 days, after you've got that done, you're looking at 30 days to bring yourself to closing. So just expect anywhere from 45 probably to 60 days to close a normal loan. We're clearing things under 10 days, but our normal loans usually are closing somewhere between 21 and 30 days. These you're going to have to add on a little bit of extra time for. So anyway, so that's a general overview of the renovation program. If you'd like more detail, if you want to get into the nitty-gritty, if you want to talk through getting pre-approved for one, if you're out there frustrated with the inventory in your market because there's nothing that you can find that's going to suit your needs, this is when we should talk, right? Because the renovation loan can help you find the house, as we said in the beginning, in the location of your dreams. We're going to build it into the house of your dreams. Hit me up. My details are on the screen. Again, please like, comment, subscribe, all that kind of good stuff. Appreciate you. Talk to you. See you in the next one.